Welcome to another day in the Matrix. This is Waters Above. I hope you're all having an amazing start to this month of May. And for those that have been patiently waiting for the market to do what it's doing right now, congratulations. You're a true wolf amongst the bulls and bears. Staying calm and not falling for the FOMO during these past 2 months is now rewarding the patient hands, scooping up the panic from the weak hands. Now, this market is getting ritualized as we speak, so it's important to realize the opportunity that's presenting itself right now, because these mid-cycle corrections are a gift. But 99% of investors fail to realize that. But here, we aren't falling for the distractions or the narratives. We're focused solely on the truth as conscious investors. So in today's video, we're going to recap some of the key points that I've been sharing over the past couple months and recap the analysis from my past videos specifically so we can position ourselves effectively and take advantage of what could be one of the most lucrative buying opportunities left for the remainder of this bull run. So you'll want to make sure to take notes during today's video, especially if you're new here to this channel, because this is going to be packed with gems from start to finish. And just a reminder, the new month has started on Patreon for the month of May. If you've been patiently waiting, I appreciate your support. You can sign up today by visiting patreon.com/watersabove to join our Mastermind community membership and to get instant access to my weekly Red Pill podcast. That's my technical analysis podcast to wrap up the week, and for me to review the altcoins that our community votes on. And next week, I'll be doing a very important, very special Red Pill podcast where I'll be reviewing all of the projects that I personally invest in, and it will be dedicated to that, and I'll be also going over my whole portfolio, breaking down my investment thesis for the remainder of this cycle. And by becoming a Patreon supporter, you'll also get access to our Discord server for our community group chat, so you could come hang out with the Wolfpack. And you'll also have full access to my entire Livestream Archive with over 100 live streams and over 300 behind-the-scenes uploads included in your membership, and the link to Patreon can be found in the description box of this video or in the pinned comment below. So if you're new here, we do cryptocurrency technical analysis and combine it with Gematria, Numerology, and Astrology to understand these markets. Feel free to subscribe and turn on the bell notification to stay updated on when new videos come out. And make sure to give this video a like and share this channel with other conscious beings to help grow our community. And with that being said, let's take the clear pill. So about a month ago, on April 2nd, I released a video here titled Warning, April 8th Eclipse Ritual Decoded. And around the 29-minute mark, I brought up this chart showing the 1-month support over here at 61,000 and reviewed the significance of that level, and that analysis mentioned that if we were to see any daily closes below 61K, to expect Bitcoin to slide down to 56 to 57,000. And as you can see here, this initial downside target that was marked off was at the heart line of this horizontal parallel channel, sitting somewhere between this 56,500 area. And as of today, we could see that Bitcoin has effectively come back to this level, back tested this on a tail. So we are getting spicy in these markets, and we have hit that key downside target that I pointed out a while ago, actually. And we're now bouncing very nicely from this area, but you got to remember the traditional markets are actually closed as I'm filming this. And we have, in a couple hours, the FOMC meeting, and I'll be talking about that in a moment. But lots of volatility entering this crypto market into our monthly close of April. And we're here kicking off the new month with a FOMC meeting. So the rest of this week is going to be very volatile. And the fact that Bitcoin was able to do this without any narrative, well, that's definitely something to keep in mind, because we have a lot more time left in today for the traditional markets to come and do what it does best, which is smack around the crypto market like a doll. So if you checked out that video that I released, you'll remember 2 key data points I brought up in regards to retesting this mid 50K territory. And it had to do with the weekly chart 21 exponential moving average. So let me pull up this chart right here. We're going to go to the weekly. I'm going to be pulling up the moving averages, turning off all this noise, and just show you what I'm talking about. We have this orange moving average. That's the 21 exponential, and we are on the weekly chart. That was one of the key points I brought up. The second key point that I brought up was this pi cycle top indicator and the 111-day moving average. So if I was to highlight this territory over here, you'll see this gold moving average, the 111-day MA. It's sitting at 57,500 effectively. And I've mentioned several times that when Bitcoin enters a new bull cycle, we typically see a move up to this green moving average. It's the 350-day MA times 2. We initially see a move up into that moving average for the first time in the cycle, followed by a rejection, which then leads us to backtest this gold moving average. That's the play. And we could see that happening effectively every single time in Bitcoin. In the last cycle, or the first cycle, we had it happen over here. If I highlight this territory, you'll see what I mean. We overextended quite above this green moving average, but then backtested it before completing the bull run. Here in this second cycle, we have right here where we hit this green moving average, retested this gold moving average, spent quite a bit on it before continuing on the bull run. And the last cycle was no different here. From bull top, blow off top to the selling climax bottom, we come up and backtest this green moving average, followed by a rejection, and then we had an even more devastating correction here with the C19 Black Swan event, but we have this rejection initially hitting the green moving average for the first time, and that was the thing that we were looking to have happen here in our current cycle today. So we just see it get rejected off the green moving average for the first time, return back to this golden moving average, and it happened every single time so far. This time is no different. Bitcoin first hit this green moving average on the 4th of March, I believe. Let me just refresh this page very quickly and show you. I'll be zooming into this area, and we can focus on our cycle. So we get rejected here around March 4th initially, spent a couple trading days above it, but then ultimately started to show some weakness as we've backtested the 60K range, the low 60K range, several times before this breakdown that we just had initiate over the past 24 hours. So once this data updates for today, you're going to see that we will have clearly backtested this golden moving average, the 111-day MA, and we could actually potentially even be below it, which is another thing that I emphasized in prior videos to look out for when utilizing this indicator. We tend to trade for a little bit of time below the golden moving average, again, the 111-day MA, after the first rejection. That's a clear pattern we've identified, and that's so powerful. What is so powerful about this is all of this has happened after the Bitcoin ETF euphoria and after the Bitcoin halving. So the up-only boys are gone now. The meme coin madness is on pause, and now we could return back to a couple weeks of the real ones doing what they do best, which is keeping calm and taking action by the blood or by the boredom, as I often say. And we're here getting some blood. So here we are, Bitcoin trading back into the 50K range for the first time in 2 months. A majority of investors thought this could never happen. And we're going to be going back to this very important chart because it was telling us the story all along. So this is big because the majority of investors did not think this could happen, but the market maker knows exactly how to sucker in retail when it's the worst time for them to be convinced into a market. Now let's focus on the taking action part that I mentioned moments ago, because that's honestly all that matters, and that's what we're about here at Waters Above. So I think it's important for us to consider the similarities here between 2016 and 2017 market to what we're experiencing today. And a key similarity is something that I brought up in previous videos about the March timeframe, right over here, because we extended 7% above prior all-time highs, followed by this 30% correction into the 888 moving average, Fibonacci retracement level. So we had a very similar thing play out quite recently. I'm going to just share it piece by piece to keep it nice and simple, and then look at today's market. So from the prior all-time high, we got about 7% up on a wick, big rejection, bull trap as you'd call it. And then we had a total 30% correction off of this level right here. followed by a couple of trading days below the 0.888 fib, and that was one of the best buying opportunities available at the time for the remainder of the cycle. We just continued to have recovery from that moment. And the way I'm pulling this fib is from this cycle high of 2013 down to this swing low over here of 2015. I'm looking at a logarithmic chart, and when I double click on the fib setting, I have this fib levels based on log scale setting turned on. Okay, now we're going to go to today's market and show what's happening. I'm just going to remove this to make it nice and clean for everyone. This is the prior all-time high at 69,000, and when we go up, we have almost about 7% to this March 14th high. Very, very similar. Chopping slightly above prior all-time highs, but not going into price discovery. And then we've had this noticeable correction, which is obvious today. And we have now 24% so far. And you see this green line across the screen. That's the 888 the 888 Fibonacci retracement level. Let me turn this on the other side so you guys can see it easier. So again, the 0.888 fib, that's huge because it's mimicking almost identical to what we saw in the last cycle. Or not the last one, but the one that happened in 2017, which we've been tracking a lot lately here, and we think that it's mimicking very, very well. It's giving us sort of a compass and roadmap to identify what's likely to come next. Of course, it's not going to happen 100% identical. We've been adding in some extra elements here, like the Year of the Dragon analysis, putting in the Chinese zodiac, of course, including the Hebrew calendar and all the esoteric stuff that we've included, such as Gematria, Numerology, and Astrology, both tropical and sidereal. So we have a lot working here, but I'm trying to keep it simple, and that's what my last video was all about, just keeping it as simple as possible. And here I am again. And I'm just trying to show you the similarities between now and 2017. So again, about 7% up above prior all-time highs, big rejection. And if we were to fulfill a full 30% correction from where we are, that would be taking us to around 52,000, 51 to 52,000. And this is where we need to bring back up this video again, because I have this level marked here and this previous trading range marked off. It's very clear. So what we could bring up that might support all of this is looking at the daily chart and the 200 moving average. So we see this light green, lime green moving average. It is your 200 exponential. And you see where it's at in regards to this prior trading range that's here, previous trading range, somewhere between 50,500 and 52,500. And that is exactly where this 200 moving average is right now. Well, if I go back to March 2017, which is what we were just analyzing a moment ago, look at what happens here. So again, slight new all-time high, bull trap rejection, 30% correction, and we back tested the 200 exponential, and that was as low as we went, just kissed it, and then recovered. So keep this in mind, please, because this is not a long-lasting correction usually. This type of more extreme move to the downside, it's sharp, it's quick, it's elusive, and it's confusing for most people. So just notice how there's that similarity of us breaking structure around this particular time of year, and we're going into back testing this area between the 888 fib and the top of the golden pocket, the 786, and we can see that this important moving average 200 exponential is now in alignment with this previous trading range. That's powerful, because this is when Bitcoin had about 2 weeks breaking into that 50K psychological level of 50K. And what I want you to look out for is the fact that once we got to February 26th through 28th, we had about 20% move in just 3 trading days. There was barely any trading between the zone, which is why I created a parallel channel between the zone, and I marked off the heart line, which is just the middle point, right? That is a little bit more deep analysis, but I tried to keep it as simple as I could back when I initially revealed this. And I believe it was very helpful because I'm looking at everything based in horizontal trading ranges rather than what you typically see with newer traders where they're putting a lot of these diagonal trend lines and showing you head and shoulders patterns, and that's fine. There's nothing wrong with that, but that should be like a tertiary part of your analysis. What is best is to look at everything on horizontal trading levels. It could give you a much better idea of how to identify resistance and support. And for those that are newer, or even if you're more advanced, intermediate, I've even noticed in more advanced traders that they somehow they usually skip the basics. It's like they disregard the fundamentals, and at this stage of a cycle it could be very elusive. And what I would share right now as words of wisdom is don't ever skip out on the basics. Always keep the basics around. They're important because that's what you revert back to during times of confusion, which I believe the last 2 to 3 months very much was, with all the things going on with the Bitcoin ETF and stuff happening with the stock market now, precious metals doing what they're doing, and war developing more and more. This is the type of environment where a lot of traders are wondering, should I be risk on or risk off? And we're starting to see that be pretty noticeable with the behavior of gold, the behavior of the DXY. And I don't have the time to get into all of those things today, but I did cover them thoroughly on my last Red Pill podcast. So again, the new month has just started for May. That last podcast I released was filled with data regarding what to anticipate next and the reasons why I feel like it's going to be going this way. Ultimately, we're going to be sharing a lot of this information today. I try not to hide anything. It's just with these shorter form videos versus the longer form videos, I'm sure you understand there's only so much you could pack in one of these. So we're going to wrap up some of these ideas, but I just want to get back to this concept of retesting this heart line the way that we did, and the reason why is because there was thin air above 52K to 62K. We just swiped through this whole level, which means that we could reverse right back down in the same fashion because we didn't build any volume here. There was no profile built. It just smashed through this territory, and then we immediately started a higher trading range. That's not good, especially when you start retesting it as a support. Eventually it could break, and that's what we watched happen. So what does this all mean? This is just what I would call a buying opportunity. And that's exactly how I'm treating this right now. I even mentioned it in my last YouTube video that I was referencing a little bit earlier about the flash correction in the alt market on April 13th, which was on a Saturday. Crypto was trading alone during that Iran drone strike on Israel. We saw many altcoins 40% down in a single day. This is something I took advantage of. I built about 10 new venture capital positions, and I put emphasis on this month of May specifically as a time frame where I'd be taking advantage of any pullbacks for accumulating altcoins, since I showed very clear data that the month of May is a pullback time frame for the traditional markets. And I also mentioned to focus on the time frame of the full moon for May. For the lowest, we'll see the traditional markets. And please know that I am talking about the indices specifically with this data and not about the crypto market. What I want to make very clear right now is that although the crypto market is affected by the traditional markets, the crypto market tends to make moves faster and more violently than the traditional markets, which is why I brought this all up, because we can be seeing this move happen quicker for the crypto market than, for instance, the indices. So when I say that we could have a stock market correction that finishes off by late May, around May 23rd, the full moon, that's where the microcycle lows would be for the traditional markets. We could see this all go down much faster in the crypto market. We could see this complete even by the end of this week in the crypto market. Keep that in mind. And that's why we're bringing up the levels, because if Bitcoin was to come all the way down to this low 50K territory in the next 10 days, then that would likely be a sign that the correction phase is over, and we would just continue on with higher lows after that. While the traditional market could definitely continue to slide more, it just won't affect the crypto market as much because the moves come in faster for crypto. Just mentioned that a moment ago, and I'm sure this all makes sense to you, especially with the traditional markets being closed on the weekends and crypto trading 24/7, 365. It's getting a lot more time in during its trading day, especially not being closed after 5 p.m. You get it. So we've had the compass here at Waters Above well in advance, and we're watching it all play out. And we have the lower target for Bitcoin around this 50 to 52K level. And if it happens, it'll put significant pressure on the altcoins, and you'll see the alt market likely slide down double the percentage move compared to Bitcoin. And when this happens, I believe selling pressure will be exhausted and sentiment will be completely reset for us to enter a recovery phase into the month of June. As of now, Bitcoin has pulled back to 56.5K. which means there's only an additional 8% or so for us to come back to this 52K territory. This is very possible with the way this whole pullback has been going so far without any narrative pushing it into this energy. So an 8% pullback for Bitcoin means you'll likely see an additional 15% for most altcoins. But keep in mind, the more suppressed an altcoin has been over the past 6 months means that it might not correct as much. It might correct only 8 or 10% along with Bitcoin. And the altcoins that were extremely bullish over the past 6 months could have even more gains to give back naturally. So if we see Bitcoin pull back 8, we might see some of those extremely bullish altcoins over the past 2 to 6 months-ish pull back maybe 20% more. So it's all kind of balancing at this time. Think about it like that, like it's a balancing moment. And what I really want to remind everyone of now is that we need to emphasize this. Don't get greedy to the downside. Everything we're seeing right now is an opportunity to DCA into position to dollar cost average. And if you want to learn more about the basics of investing and want to take advantage of this crypto bull run, check out my website, watersabove.com. My crypto mastermind course was created for this exact purpose, and it even includes my full exit strategy blueprint for free within that course, giving this even more value. And for those that invest in themselves by investing in my art, I'm grateful for all your support. It truly means the world to me. Also, another reminder about today, I did mention this earlier, is that we have a FOMC meeting. So Fed Chair Powell will be spellcasting the investor world. Fun. And of course, this is going to bring a lot of volatility to the markets as a whole, which will affect the crypto market. And this is likely to be the case for the rest of this trading week. So keep that in mind. And if you've been following along here, you'll know I've been warning about this month of May for several months now. We have this election year data that's very clear. Since during the election years, we typically see this month of May in the red, followed by a solid recovery in July and August, but June is like that pivot month. I want you to keep that in mind. So think of June as the pivot and recovery, and July and August should be really exciting during this year of 2024 as well. I don't think it'll be any different, which means that whatever pullbacks happen in this month of May could be the best buying opportunity we get for the rest of the cycle. And this was all reviewed in my last video going over the year of the dragon analysis and how late May into early June is typically the lowest the market goes during the dragon year, which we're in now. And that's been the case going all the way back to 1940, which was also during World War II. And that's very important to revisit because we have this war narrative growing now more than ever, and kind of bringing this vibe of World War III to the world stage. And that was also covered in depth in my last video as well with this 1940 April solar eclipse. Following that was an event in Denmark, and just after our recent solar eclipse in April this year, we had the Copenhagen Stock Exchange fire ritual. During the year of the dragon, it was 100% ritualized. Go rewatch that video if you haven't. And this script is unfolding so similarly that it's making me confident that the World War II timeline is significant and should be prioritized in our analysis for this year and how the markets are likely to behave. So the key date to watch out for next is May 10th, all right? When the National Socialists invaded France, Belgium, Luxembourg, the Netherlands, and the following year of 1941, on the exact same date of May 10th, you could see that right there, Germany bombed London, and in response, the British bombed Hamburg. And this is significant because of the astrological connection of the Jupiter-Uranus conjunction in Taurus, which happened a couple weeks ago for the first time in over 80 years. Specifically, the last time this astrological alignment happened was in 1941. On May 9th, 1941 to be specific, and the day after that was this war event that I'm talking about, so it's big stuff. And what I recently decoded during my last Red Pill podcast, which is available for the Patreon supporters of our mastermind community, was a big connection between the number 49 and this specific time frame we're in now. And it all clicked when I connected the day that C19 was declared a pandemic on March 11th. So let me quickly show you this. March 11th, 2020, and connecting it to everything between 4/10, so April 10th of this year, to May 10th of this year. And now the reason behind this is because it is tied to this number 49 and 49 months from this event to this time frame we're in now. So you can see from March 11, 2020 to April 10th, 49 months. Now, why this matters is because of this exoteric sporting event of the Super Bowl of 2020, where the Chiefs and the 49ers went against each other. And the 49ers lost that Super Bowl in 2020. And then a month later, we had C-19 was declared a pandemic. Now here we are, and we just had in this recent Super Bowl, the same teams go against each other with the same outcome, with the Chiefs winning and the 49ers losing. And we have this 49 code, and it seems to be pretty obvious that it's been showing up a lot lately. April 10th was right after the solar eclipse, the Great American Eclipse, and this number 49 kept coming up in the code because the 49ers lost that last Super Bowl in that rematch against the Chiefs. Now, then this year, the Chiefs and the 49ers, they went against each other, and there was so many of these two codes, like the number 2 and the number 22. So let me just review this really quickly. The last Super Bowl that they went against each other in 2020 was on February 2nd. So we have the 2-2 Gregorian date in the 2020 year. So you can see, you remove the 0 in the rules of numerology, you get 2-2, making February 2nd, 2020, 2-2-2-2. Then you have this Super Bowl this year being their second time facing each other, and it was their second Super Bowl ever to go into overtime, and the Chiefs win for the second time in this rematch against the 49ers, and the 49ers lost with 22 points. So you can see all these twos. And the 49ers and the 49 code is powerful for our crypto market decodes, since the moment the Super Bowl finished, Bitcoin immediately hit 49,000, and then Joe Biden posts that infamous picture of the laser eyes and says, just like we drew it up or whatever, basically saying it was all scripted. Then just recently, this mythological character, Satoshi Nakamoto, turned 49 years old after Bitcoin hit an all-time high. And the day after the Great American Eclipse is the Gregorian date of 4-9. So now, from April 10th connecting to C-19, it has been 49 months. And we've been seeing so many things go down on the world stage since just this recent solar eclipse. So this will be 49 months since C-19 started, and it was those same two teams that went against each other in that Super Bowl back then in 2020 as just this year. And you see what's happening. It's a script. So everything from May 10th to from April 10th to May 10th is in this 49 code, 49 months. And May 10th just so happens to be that date that I brought up during World War II, where we have May 10th of 1941, the bombing of London and Germany, and then the prior year, which matches our year right now, the year of the dragon, this big event that happened between the National Socialists and all of these nations. And if you were to look at the S&P chart in 1940, I'm not sure if I'll be able to load it up because it is a lot of data to go back to. Let me see. And I just want to show you guys really quickly. It's unbelievable how big that correction was the moment that happened. So this was a significant event in World War II, for sure. And I believe this is what got America interested in joining this particular conflict. And of course, America didn't join until the following year, which is the year of the snake. And that's the thing that I've been telling you to expect for next year. So over here, we have this 1940, and right here on May 10th, big slide in the markets. Let me turn off these moving averages and you can see what I'm talking about here. So here we are. You have the dragon. You see how sideways we were? And then boom, May 10th, huge correction. And then we bottomed out around the May full moon, which is what I'm saying to anticipate this year. Now, I'm not saying that it will repeat exactly the same way with as big of a correction, but what seems to repeat is the lowest part of the correction being in the month of May. Early June, the latest. So with this data being less than a couple weeks away, about May 10th, just keep this in mind. The market is already showing signs of weakness, and this is very important to keep in mind at this time, because this opportunity that we're getting is very similar to like March of 2017, where once we got this pullback over here, right there, we just kept moving up after. And that was an incredible opportunity to get in. We went up for the remaining 260 days, over 2,000% in Bitcoin. I think a lot of altcoins are going to repeat that, including XRP. So I'm going to wrap up today's video here. I gave you the big numbers to look out for on the Bitcoin chart, and that is the energy of this market, so that will pull back everything else. But consider something like XRP is already so suppressed, it might not pull back as much as something like, let's just say, Solana or like Shiba Inu. These are coins that have been doing very, very well over the past 2 to 3 months, very, very bullish, overextended, and you can see larger pullbacks in those. It's not me trying to call out those specific projects as problems or whatever. Over here, we're not picking any sides. We're not one coiners. We're not Bitcoin maxis. We're not in the XRP army. We're just following the truth in these charts and making sure to keep our emotions out of it so that we could take advantage of moments like this. I think that's really what needs to be said during these times, because the polarization has been flipped on its head as of the past week. We've seen it happen, and a lot of people that were screaming from the hills are now silent, and they should have never been screaming in the first place. So if you were sucked into that kind of stuff because of the emotions, you probably learned a lot over the past 48 hours, and that's good. Don't think that you lost money. You got an opportunity and you learned from it all. We are all learning, myself included. I think that it's important that right now we consider this opportunity as rare, and it's been something that we've been preparing for. It's great to be calm and ahead of all of this, but ultimately what matters most is taking action. No matter how prepared you were, no matter how accurate your analysis was, it's irrelevant if you never take action. So I myself have been positioned majority in this market before the end of 2023. I am now just waiting on the sidelines to get some more last-minute venture capital accumulations before we continue to move up. I did make some a couple of weeks ago during that April 13th flash crash, as I mentioned, and I'll continue to add to my stack. So that's why next week it'll be a very powerful red pill podcast. I'll be revealing, going through all of the projects that I personally have invested in. I'll be recapping these new venture capital plays that I've just put into my portfolio, including Jupiter, which is very interesting. So I have some new gaming tokens I've gotten involved in, and yeah, I'll be preparing that, and by next week it'll be ready on Sunday. So by joining the Patreon, you'll have access to that and all of the past Red Pill podcasts, over 160 podcasts. In the meantime, you could check those out, and I'll be catching you guys all very soon. Enjoy Beltane, and I hope you all have a beautiful rest of your day in the Matrix. Much love.